Watch the full story. Download the app now.
Hello and welcome. You're watching First Take here on News 9. I'm Suyash Maheshwari and with me in the studio as always is Amit Ranjan. We'll bring you the morning action on D Street. Also will be in focus the September quarter earnings of Powergrid Corporation. We'll get you the street's pulse on that. But before we do all that, let's take a quick look at how the equity markets around the world are doing. Amit, over to you.
Thank you, Suyash. Good morning. Little muted. S&P 500 closed just 0.18% up from its previous at 4,364.98. Dow Jones Industrial Average closed just 0.10% up. Nasdaq Composite ended also 0.30 higher at 13,518.78. Now, just a little bit into Nasdaq Composite. Nasdaq Composite earnings is the seventh straight positive session since January.
Oh.
So the last session was the seventh straight one in the positive for Nasdaq. Both S&P and the 30 stock Dow were higher for a sixth straight session since June and July respectively. Stocks ended lower by 0.16% at 443.52. And if I come to the Asian markets, they are in the red also. Hang Seng is down 1.5%. Nikkei is down 1.12%. Just a little, but the markets, the West is muted. The Asian markets are starting lower.
I mean, Amit, looking at how the markets have been in the last 3 days, I mean, the kind of run-up we have seen, I think some moderation in return, some consolidation is due. And even I'm looking at the other factors that we have been tracking. There are some which have turned in favor of the Indian markets, especially for oil. Now, Brent crude has slipped below the $85 a barrel mark after Benjamin Netanyahu said that Israel will consider a tactical halt of fighting in Gaza Strip, at least for now. So because of that, the oil prices have sort of cracked by about a couple of dollars, and Brent crude has fallen below the $85 a barrel mark, which is the levels which it was at before the Israel-Hamas conflict began. The dollar index is also at around 105.3 sort of levels, 105.3 sort of levels, which is the lowest level in nearly 2 months. On the other hand, 10-year US bond yields have picked up slightly. They have picked up by about 8 to 10 basis points overnight, but they're still comfortably below, the 5% high that we saw just a couple of weeks ago. Now, moving back to the Indian markets have also opened on a muted note with the first tick for Nifty coming in around the 19,400 mark. Now, the markets have pretty much stayed at the levels where they opened at. As you can see on your screen, as of 9:30 a.m. this morning, Nifty 50 was down about 0.22%, below the 19,400 levels, but above the 19,350 levels. The 50-point range has been so far the range for the day. Nifty has been trading in the range between 19,350 to 19,400 so far in the day. Sensex, on the other hand, opened at 65,000 mark, but fell sharply below it and trading with a cut of 200 points from those sort of levels. The broader markets, Amit, as you can see, as of 9:30 a.m., they are resilient. The mid-cap 100 is up about 0.23%, and it has rescaled at 40,000 sort of levels. The small cap index, on the other hand, has scaled a new lifetime high today as well. It's up 0.2% at 13,170 mark. Volatility continues to spike, and it currently sits at about 1.62. These numbers are as of 9:30 a.m. at 11.2 sort of levels. Now, with that, let's also welcome our first guest on the show, Avni Bhatt, who's a senior VP at JM Financials. Hi Avni, always good to see you. Thank you for joining us here on First Take.
Good morning, Suyash. Good morning all, and a very warm good morning to all the viewers as well.
Avni, now the market have been on a tear in the last three sessions. We have seen a rally of about 400 points in Nifty. The index also closed above its 20-day moving average on Monday, placed at somewhere around 19,411 sort of marks. Time for some consolidation now?
Ideally, that would be very healthy if market consolidates a bit, if it cools off a bit. So whenever, see, last week when we spoke, it was a sell on rise scenario, and twice it came down from the highs of 19,250 all the way to 18,900. And similarly on Bank Nifty also, right from 43,350 to 400 levels down to 42,800. But now the scenario has changed. Friday, Nifty closed above the 19,250 mark. And since then, yesterday also the uptrend continued. So I think some consolidation should help help make the uptrend stronger. So I think around this retracement could find support around the 19,270 to 19,300 mark. 19,300 put is where we saw a lot of open interest built up, a lot of writing positions built up for the coming weekly expiry. So I don't think it's a very negative market. Yes, some bit of consolidation will only help to make the uptrend stronger.
Avni, we have also been talking about Nifty Bank and how it has underperformed the broader markets in general. Yesterday turned net positive for the very first time, for at least for 2023. It was up about 1%. Has seen a good bit of movement in the last three sessions at least. It has rallied by about 900 points. Will this rally continue, and can it take markets higher to perhaps new all-time highs in the next couple of months?
So Yash, my view is that in case if Nifty has to cross that congestion zone of 19,850, from where we have seen a correction of around 1,000 points, nearly 1,000 points twice, if that level has to be taken out on Nifty, it has to be Bank Nifty which should lead the entire rally. Until and unless Bank Nifty participates in this rally, we will not be seeing any new all-time highs in any time soon. So, my view is that for Bank Nifty, 43,600 is where the major resistance is, which Bank Nifty closed yesterday above that mark. And I think slowly and gradually it should move towards 44,000. Now, one more interesting data point is that if you consider the FII participation individually in each of the index, FIIs were continuously selling Bank Nifty futures. But only in last 2 days, they have turned buyers in Bank Nifty futures. So I'm talking about specific participation in Bank Nifty futures. So they have turned positive. They have been selling puts. So that's a very positive sign. Some retracement should help again for Bank Nifty trend also to get stronger. Slowly and gradually, we are heading towards 44,000.
Now, Avni, we are drawing curtains on the Q2 earnings season for India Inc. Nykaa reported its results today. Healthy set of numbers. Profit was up around 50% on a year-on-year basis. Revenue jumped by 22%. And the stock has been on a tear. Yesterday it ended about 5% higher. Today it's also up about, I think in the morning it opened around 3.6, 3.7% higher. Currently it's up about 2% or so. And it has been on a tear, as I said, since its Q2 business update. What's your overall outlook on Nykaa? Is there more legs to this rally?
So Nykaa, if you see the weekly charts, then there's a very, very strong resistance at around 155 level. And that is where most of the times the selling pressure emerges. So I think today also it did make a high of 154.8 and it is seeing some profit booking. So until and unless that level is crossed, I think it should trade in a consolidation range of 140 on the downside and 155 on the upside. Once we see a breakout, a close above 155, the stock will rally up to 180 in a very short time.
Now, Avni, another company that came out with its Q2 results was Divis Labs. Divis missed the street's expectations. However, the management outlook on growth, growth opportunities and commentary on custom synthesis business and demand outlook in general was perceived as a big positive, and as a result, we saw a good bit of movement. In fact, the stock ended as a top gainer, among Nifty stocks yesterday, but it has been an underperformer. I think the returns for year-to-date returns, it has given to the tunes of about 3.5%, whereas Nifty Pharma has rallied by about 10% or so. What's your outlook on Divis Labs?
So Divis again, technically and options data, will look at both these pictures. Now technically, last week it has given a bullish engulfing pattern on the weekly charts. So that's a positive sign. It is moving above the previous week's high, and that's a very good sign. Now, looking at the options built up, the highest open interest in calls is placed at 3,500 call and 3,600 call. Now, only a bit of worry is yesterday, although Divis Lab moved above 3,500, there was no unwinding of 3,500 calls, which means that the call writers at 3,500 are still hoping for Divis Lab not to go above 3,500. So I think for the current series, for the November series, we should be seeing the stock consolidate between 3,400 to 3,550, around 3,550 level. And technically 3,560 is the level above which once it closes above that level, we should be seeing the stock head towards around 3,800. So I think 3,560 is a very crucial level. It has to cross and sustain above that level for any up move to continue.
Hi Avni, Amit here. Before we let you go, could you give us your top 5 picks for the day?
Hi Amit, sure, yes. The markets are looking pretty good, and these are some of the stocks which are all frontline stocks. We are sticking to the mainline stocks and avoiding the mid-cap stocks. So my first pick is ONGC. Today, and opening trades itself, it has rallied up to around 195, but it has given a breakout above 192. It's a good trade if you get it at around 192 to 193 level. It's a good trade to enter, and you can keep a stop loss of 188. I think we should be seeing the stock head towards around 208 to 215 in a very short time. The second one is Bharat Electronics. That again around 136 to 137 level is a good entry level. 147 would be the target for the stock, and 132 is the stop loss. So again, here risk reward is pretty good. And of course, the leader is L&T. L&T post results, it has seen some profit booking, some retracement back to the breakout levels, but it is ready to move up again. Around 2975 is the level where one can enter for a target of 3,100 and keeping a stop loss of 2,920. Now, one dark horse could be Tata Steel. So Tata Steel is making an attempt to break above 120. So this is, we are preempting the breakout. It's trading around 118 to 119. I think it should break out above 120 to 121 congestion zone in a very short time. We have seen some unwinding happening at 120 call yesterday. So I'm targeting, it's a small trading bet. We are targeting 128 on the upside, keeping a stop loss of 113.5. And one from the defensive sector, which is Glenmark. Now, Glenmark has been, if you look at the daily and weekly charts, it's a fantastic consolidation that we have seen, and the stock is not breaking the support levels. So again, this is in anticipation. Once this consolidation ends and it moves above the breakout zone, above this congestion zone, we should be seeing the stock heading towards 815 levels. Currently, one can buy in the range of 755 to 756, keeping a stop loss of 730.
All right, that's the top picks from Avni. A lot of large cap picks there, Avni, L&T, Tata Steel, ONGC. Perhaps the focus now will be more on, on the large caps than mid caps, would you say?
Of course, when markets get a little jittery, they are approaching the resistance zones. Again, we may see some kind of selling. So in this kind of volatility, mid caps are the first ones to get beaten down. So we'll stick to the large cap companies. Our view is positive on large caps.
All right. Thank you, Avni. Thank you for joining us here on First Take. Always pleasure talking to you, ma'am.
Thank you.
Thank you.
With that, Amit, let's also look at how the markets are doing. Nifty is pretty much holding above that 19,350 sort of levels. As I can see, it's currently hovering around that 19,350 to 19,360 sort of range. The small cap and the mid cap, the small cap index on the other hand has dipped into the negative territory. It's down about 0.2%. It makes sense since it's the only index that actually touched an all-time high levels in the recent run-up. But with that, let's also welcome our second guest on the show, Mohit Gang, who's the co-founder and CEO of Moneyfront. Hi Mohit, good morning. Always a pleasure to see you.
Morning, Suresh. Always great to be on your show.
Now Mohit, we have been, the last time we were chatting, you were of the opinion that, perhaps it's time to stay away from the markets for some time now. There was a big, event in the name of Fed keeping the policy rates unchanged. Does that change the overall sentiment? Because we have seen a good bit of run up since then.
Totally, Suresh. I think, look, honestly, market is a good teacher always, and market makes you eat humble pie at many times, right? So one movement, one single line from Fed can actually change the way markets react and see risk or perceive risk, and that is what has actually happened with the Fed kind of holding the rates to where they are. I think the markets have totally taken a risk-on mood now, and globally, you see the sentiment has kind of changed because of Fed pausing, and people think that this is the peak of rate cycle in US. And if that be true, I think it then again can augur very well for emerging markets, all riskier assets and everything. And you see the impact of that on gold itself, right? So gold has actually pulled back a little from a peak of around 2000 odd dollars to now 1970, 77 something. And overall, the riskier equity class is flying across, right? Not just in US, but in India, obviously, the markets have shown good sign of strength. And I think the overall consumption story, the result season, everything has been fairly positive. So there is no, what do you say, the result season, if you look at in a whole basket, I think it's only positively surprised, right? So I think companies are beating estimates on a majority basis, and which is actually shaping up well for the market. The India plus one story is also going on well, though FII flows have been a little muted of late. They have been pulling out, but not to a very large extent. But anytime an FII pulls out, I think the DII flow of purchases is extremely high, and there is good, robust local domestic demand in the markets, and which is, I think, holding up the market. So my sense is, yes, I think the mood changes a bit with the Fed commentary, and overall the risk on trade is again on in the market unless something dents. Also on the geopolitical front, Suresh, just one last point here. The things have not escalated, which if you recall in my last session with you, I think there were these two factors on which I was basing my entire theorem, which was Fed and the geopolitical situation might escalate. But with Lebanon and other countries staying out of the entire action, I think it remains isolated to that particular West Asia corner, and I think which is also a big positive for the market. So overall, I think yes, markets have again taken a risk on shape.
Now Mohit, as we were talking, Hunasa Consumers has listed, and it has listed at around 333 rupees a share, a premium of about 2.8% or so from its listing price. A muted listing. I mean, I was reading the brokerage reports. They suggested a listing of about 8 to 10% at a premium of about 8 to 10%. So what's your overall opinion on MamaEarth in general? Because I mean, to me at least, it seems like a deja vu of Nykaa, because the writing on the wall is clearly there. The valuations are high portion of OFS, weak financials, low promoter holding. Would you advise buying into that stock?
Look, Suresh, I've always maintained that there's no dearth of good quality stocks in the market. You don't have to rush at the every IPO which comes in. And with a fancy story out there, you have to be doubly sure whether you are really buying the correct name or not, right? And I kind of concur with you on that. Honestly, I think listing is more a function of how the market mood overall has been and everything. I would be very surprised if these prices hold on for a fairly long while. Valuations ultimately do catch up and earnings do catch up, and real test of a good stock is its cash flow, which I think will take a long while in these kind of stocks to come through, right? And also, as you rightly mentioned, whenever there is a high degree of OFS, though out here some portion is actually going for fresh growth, or there is a fresh issuance of equity in this case, which is very marginal though. But yeah, I'm a little skeptical when promoters completely come out in these kind of markets to sell their own stake, right? So yeah, I think we'll wait and watch for a year or two, maybe, if not more, before the company can actually consistently deliver what is expected in the public markets, which is good positive cash flows and profitability on an overall basis, right? So unless that comes in and is a formidable force, is a quarter on quarter phenomena where you think margins are increasing and the equity efficiency is there, that's when you would want to go into these kind of stocks. Otherwise, I think there's no dearth of names in the consumer space, in the listed market, which are extremely good, robust managements, long-lasting track records, and good overall capital efficiency. So I'll kind of stay away from this.
All right. Mohit, hold on there. We have a big earnings today. Powergrid Corporation is expected to come out with its results in the market hours. Amit here has expectations ready for us. Amit.
Not just expectations, there is a trend in the sector as well. So what the market is expecting is there's a slight fall in revenue of 0.5%, which will expectedly come in at 11,055 crores, down from 11,150.57 crores the same quarter last year. This is probably due to the contributions from the consultancy businesses.
All right.
So a shortfall, a decline in net profits are curiously likely to rise 25%, as much as 25%, coming in at 4,178, up from 3,650 crore levels the same quarter last year. Now, just if we look at the stocks, Powergrid Corporation has almost in the last 1 year, from November 6th, 2022, it has gone up over 20%, even though there is a marginal down today of 1%, but almost over 20%, there has been a rise, and continuous rise over the year. If we look at the competition, Tata Power has gone up 8.9% during the same year.
All right.
JSW Energy 16.25%, NHPC 14.8%. The only black sheep that is not doing well for obvious reasons is Adani Energy, which has gone down. So, Mohit, I have a question for you. Is it because of the policies of the government favoring the coal sector and coal production going up in the last 1 year? Almost, it's gone up to 67.27 million tons, up 16.1% year on year. Is it because of that, or is it just a good sector to look at right now with the smart cities and everything coming up?
Look, I honestly think it's a combination of all the factors coming in this space, and it's been a long while homecoming for all these PSUs, infra-related stocks, so on and so forth, right? I think obviously coal production, the focus on coal production, domestic coal production, has been extremely high because we've always been a coal importing country, and I think that is high up in the order of priority in the minds of government, and which is where we are headed to also, right? I think that's one of the biggest factors. But I think the second factor is equally strong, if not more, which is the focus on this entire power space, this entire what do you say, sprucing up of the power sector in the country. There have been loss-making units for years and years put together, with the new investment on the infra side, with the new smart cities coming up, with new focus overall on development of metros and other things. I think this overall piece is coming up together. Plus, government has taken a lot of initiatives in cleaning up the balance sheets of most of these companies. Powergrid enjoys a very unique space in this entire category, where it has where it is, what do you say, more in a favorable space because of it being a government backed entity. So it has that kind of first access to the government orders, so on and so forth. So yeah, I think in that space, it's a very interesting and a fascinating company. I think the overall sector is going through a large cycle of reforms and is going through a large cycle of what do you say, upgradation, large cycle of India coming this whole story of modernizing of the country coming together. So I think it will be a long time beneficiary if the government policies remain favorable. If the focus of the government remains per se on the infra sector, then I think yes, this is a fairly long term trend to catch.
Yeah, Mohit, yeah, like taking on from what you said, there have been government initiatives, policy amendments contributing to this progress. Now, there's another sector that we have been looking at of late, Suyash and Mohit. Now, in banking, journal provisions on the balance sheet is something that banks set aside in anticipation of losses, bad debts, bad assets. Now, SBI came out with their result recently, and that is what triggered it. They have, for their year-on-year, their provisions have been down as much as 96.2%.
Oh.
Their profits have just gone up 8%. HDFC, same during the same time, year on year, down 10.4% their provisions. Profits just up 6%. ICICI Bank down 64.6% in their provisions allotment. Profits are up 36%. Canara Bank down 28.3%. Bank of India down 57%. Their profits were, of course, also 52%. The only anomaly in this were Bank of Baroda. It rose 11%, but they have had to put provisions aside because of their internal issues that have been coming to light. Axis Bank, which recently concluded its takeover of India's Indian wing of Citibank, they set aside 48%. That was up 48%. And Dena Bank, quarter on quarter, their provisions were down. They are in a loss.
Oh.
But year on year, their provisions were up. Mohit, my question to you is, does it augur well for the banking industry, or is it just something that banks are doing to shore up their profits?
Look, so honestly, I think on the overall banking space per se, we are extremely bullish on both the PSUs and the private sector banking space. Except, as you rightly mentioned, except for Bank of Baroda, I think the results have been overall fantastic on the bunch. SBI results were terrific, right? The cleaning up of the balance sheets is a story in real. And for last 2-3 years post-COVID, the way cleanup of balance sheets have happened, the way NPA numbers have come out. I think it's a massive story unfolding in front of us, right? And the overall India story, if you really want to capture, you have to capture. If you can capture it with one theme, it is banking per se, because finally this money goes out to the to all the sectors and individuals of the country which are booming largely, right? So my sense is yes, PSU space is extremely hot right now, and valuations have always been attractive in this space. SBI per se always looks like a fairly reasonable buy if they can continue the profitability trend and the margin trend and the NPA story. I think if they can just hold on to that NPA provisioning part of it, I think this stock is slated for a big up move from here. On the private sector banking space also, we've been fairly bullish. I think that's one space which has just not clicked for last 1 odd year. All the big names per se, which is your HDFC, Axis, Kotak, even ICICI to a large extent for last 1 year hasn't delivered any great returns, right? So, and I think this is again a long time overdue kind of a move. If the overall story continues to be the way it is, I think this entire pack, the private and the PSU pack, should really surprise on the upside.
Mohit, just an additional question. When provisions go down as much as 96%, it does raise eyebrows. Do you think banks are doing their homework better to that they do not have to set aside funds for bad loans?
And also to add to that, provisions are coming down at a time when we are in a high interest rate regime.
Yes.
I mean, the defaulting probability is much higher over here. So what's going on?
Okay, I think that's quite a skeptical question from you, Suresh. So yeah, I understand where you're coming from. High interest rate regimes should definitely hit the lowest strata of the borrowers, either be corporates or the individuals, and which is not happening right now. But you have to also understand the background of it. RBI hasn't raised as much as other global peers have done, right? I think here the central bank has been extremely prudent in terms of the rate hikes, and we have been fairly stable on the rate regime for a long while now. My sense is I think the credit here goes to the central bank completely. They've not been overtly aggressive trying to tackle inflation because they've realized the true causes of inflation, and they've gone only to an extent where they can really see that the credit growth or the credit quality of the country doesn't get hampered to a large extent. However, having said which, I think if the rates remain high for a fairly long while, Suresh, what you are saying might actually come up true, because we've seen in US high rates have resulted in few banks collapsing, right? You saw a couple of cases in US where the lower strata of banks actually collapsed, and which is a global story. As the rate remains elevated, you will see the lower strata of borrowers keep getting eliminated from the overall ecosystem. So which might happen. Maybe the corporates who find it very hard to borrow might really struggle to catch up to a high rate regime. But I think that story, if the rate cycle remains where it is for another year or so, then perhaps that story might start unfolding. But as of now, I think it is looking extremely good. The balance sheets are getting cleaned up as we are talking, and I think there has been some great work and effort being put in on the entire PSU space by the central banks and the government to kind of clean up the balance sheets, and I think which is all showing up now. So overall, I think I'll give credit to the space out here, and we still remain positive.
All right, positive on bank and India in general. Mohit, always a pleasure speaking to you, sir. Appreciate you joining us here on First Take.
Thank you so much. Thank you.
But Amit, let's also look at how the markets are doing. If you can pull up that graphic as of 10:10 a.m., Nifty is still holding on to that 19,350 mark. It's up about 0.27% at 19,359 sort of levels. Sensex is closely inching towards that 64,750 mark. It's down by 0.33% at 64,744. Now this is as of 10:10 a.m. this morning. Mid cap 100 is holding above the 40,000 mark. It's currently at 40,051 sort of levels, whereas a small cap index is shuffling between the green and the red, but sitting well above that 13,100 mark. But with that, it's a wrap on this edition of First Take. Keep watching News 9.
Delhi has the fastest growing metro network among G20 nations. From 6 stations in 2002, it today has 286 stations. Reliability, cleanliness and affordability